One of the biggest mistakes that people make with their money is that they assume that they need to buy a home to become wealthy. But in this video, I'm going to show you how you can grow your money by renting instead of buying a home. What's up, everybody? I am Jaspreet Singh from the MinorityMindset.com, where money minds rethink rich. If you want to become wealthy sooner rather than later, you should buy a rental property before you go out and buy a home. A rental property will pay you with cash flow, while the home that you live in is going to eat your cash. When you have a rental property, you have somebody else paying your mortgage, but when you own a home, now you're the one that's paying your mortgage. And when you're buying a rental property, you're buying it with the sole purpose of making money, versus when you buy a home, you're not buying it with the sole purpose of making money, you're buying it with the sole purpose of having a home to raise your family and to make memories in. So you're going to look at your home differently than you would a rental property when you're looking at the finances of the actual property. Let's assume that you have two options. Option one is you have $50,000 that you can use as a down payment for a brand new home, and then you're going to use this as a down payment for this home, which costs $250,000, which means you have a $200,000 mortgage, which means your mortgage payment is going to be around $1,000. But now you add in your property taxes, your insurance, and your general upkeep for your property. This is going to cost you right around $1,500 a month to own this property, versus option two. Now, you are not going to buy this property. You're going to keep this down payment and you're going to put it somewhere else. And instead, you're not going to be the one paying the mortgage. You're going to be paying rent. And in this case, rent is going to cost you on this exact same home, let's say $2,000. At first glance, you're going to say, oh my God, it's so much cheaper for you to go out and own this home because now you're only paying $1,500 a month versus here you're paying $2,000 a month. So why are you throwing this extra money in the garbage? But the reality is, when you rent your home, you're also getting some extra value, because now you're not the person in charge of fronting the $30,000 bill to repair the roof when the roof gets old. You're not the person that's in charge of fixing the window when the window cracks. You're not the person that's in charge of taking care of the toilet when the toilet breaks. That's the owner's job. So you're paying a little bit extra money to rent here, but you're also getting some value because of it. But let's really talk about how you can grow your money if you rented your home versus if you bought your home. But before we get into that, I need you to do me a quick favor and smash the thumbs up button below. And if you are looking for some extra minority mindset, we have a couple new minority mindset YouTube channels that I think you'll love. We have one minority mindset clips channel where we highlight some of the best minority mindset clips that we have. And we also have the minority mindset Spanish channel where you can watch our financial education videos in Spanish. So if you want to check out these channels and subscribe, I'll put the link to how you can check out both of these channels in the description below. If you go down this route, you will only make money when you sell your home, and the whole idea is that hopefully you'll be able to sell your home for more than what you bought it for. And the second risk is you're living in an area which is depreciating because maybe you have more crime coming, or because businesses are leaving. Whatever the reason is, the value of your area, your neighborhood is dropping, so now you're not able to sell your home for more or what you bought it for. So now if you sell your home, you're not going to get your money back. But in a good case scenario, you bought this home in a good area, and then you'll be able to sell it for more than what you bought it for when it comes time for you to sell your home, and then you move out. There's nothing wrong with owning a home. I just want you to look at your home a little bit differently than the majority of people do, because the majority of people talk about your home being an asset, something that is going to make you wealthy. But I want you to think of your home more as a liability instead of an asset, something that eats your money instead of something that makes you money, because now if you do that, you're going to use your money a little bit differently. The reason why so many people like the government and the bank and your realtor keep telling you that your home is an investment is because they make money when you think your home is an investment. Because now if you tell yourself that your home is an investment, you're going to go a little bit bigger, because the home that you're living in is an investment. So why not buy something bigger? Because all this money that you're paying towards your home is making you wealthy, because you're just building equity in this property. But the problem with that is, if you are stretching yourself thin and if you cannot afford the home that you live in, you don't own your home. Your home owns you. It's great news for your realtor, because now your realtor got a bigger commission check, and as soon as you buy a home, it's your problem, not theirs. It's great news for the bank and your lender, because they sold you this massive mortgage, and so they're going to be getting these monthly payments, because now you have to keep sending them your mortgage payments. And it's also good news for the government, because when more and more people are buying bigger real estate, well, that helps fund the economy. Your home is a place that you're going to live, that you're going to use, that you're going to make memories in. That's how I want you to start thinking about your home. I don't want you to think about your home as this asset that's going to make you rich, because you don't know that until you actually sell your home. And if you cannot sell your home for more than what you bought it for, well, now it's a losing asset. So if you want to buy a big luxurious mansion, fine, there's nothing wrong with it. Just make sure you can afford it first. But let's talk about things that you can do with your money if you don't go out and buy a home, and how you can make your money work for you if you rent instead of buying. I'm going to go over 3 different things that you can do if you want to grow your money by renting your home instead of buying a home. And let's start with number 1. Number 1 is this situation that you have right here, where now instead of you going out and buying a home, you're going to rent a home, pay $2,000 a month, and then you're going to take this extra down payment right here, and you're going to use this as a down payment for you to go out and buy a rental property. Now there's a couple things that you might be thinking, but Jaspreet, how can you go out and use all this money to go out and buy a rental property where now you have higher monthly costs? You're paying $2,000 for rent here and $1,500 a month here. Well, for one, you got to understand that when you own a home, it's actually going to cost you more than this, because now you're going to have to pay for the upkeep. You're going to be the one paying for the upgrades. So it's going to be costing you just as much here as it would here. But for the sake of this example, let's go with that. Let's assume that you're going to be paying way more money to rent than you would buying. So let's assume now that you only have $30,000 that you can use here for a down payment, and you're going to keep this extra $20,000 aside so you have extra money to afford the higher cost of rent. Now what you're going to do is you're going to use this $30,000 as a 20% down payment on a $150,000 home. Now for those of you that are in New York and California, you're going to say, $150,000 home? Where in the world can I buy a $150,000 home? In my area, $150,000 is going to buy me a closet. Well, you can find a $150,000 rental property in many different areas around the United States, so you might need to start looking outside of your state. Like if you look in the Midwestern United States, you will be able to find great homes and great neighborhoods selling for less than $150,000 that you can turn into awesome rental properties that will pay you every single month. Now you're going to find this $150,000 home, which now you're going to rent out for $1,500 a month. And I'm telling you this from experience because I have bought multiple homes for around the $150,000 point, which I have rented for right around $1,500. So now you're renting it out for $1,500 a month, which means you will be able to generate right around $18,000 a year in rental income. But that's not all the money you're going to have to keep, because chances are you're not going to be able to rent your home out every single month of every single year. You're going to have a vacancy factor. You're going to have to pay your property taxes, your insurance, your maintenance, and your management fees. So if you add up all these fees, because I want this property to be completely passive for you, I don't want you to have to do any work. As soon as you buy this property, I want you to hand it over to a property management company that's going to do all of your day-to-day work. So once you hand the keys over, this property is going to be able to generate $18,000 a year, but you have to subtract your expenses. In this case, those expenses would cost you right around $6,800. Again, that's your property taxes, your insurance, your maintenance fees, your management fees, and a vacancy factor. And then you're going to have to pay off your mortgage every single month, which in this case would be $600 a month or $7,200 a year. So after paying off all of your expenses and your debt payment, you would be left with right around $4,000 of positive cash flow from this property. Now remember, you didn't put in all $150,000 into this property cash. You got a loan. You only put in $30,000 of your own money, and you made $4,000 of profit that you get to put into your pocket. That is a 13.3% annual return that you're making on your money, cash on cash. And this is $4,000 that now you can use however you want. This is $350 that you're going to be making month after month after month forever until you decide to sell this property. And now this is $350 that you can start putting to help you pay for your rent payments, or it's $350 that you can use when you go out to buy your own home that you can use to help cover your mortgage costs. So now you have this property where your tenant is paying for your mortgage in this property, and they're also putting some money back into your pocket. See, we live in a consumerism society where everybody is just focused here. They're focused on how they can buy themselves the biggest and nicest home possible. And when you buy that, now you're going to be the person that's paying out this money every single month. It's costing you $1,500 a month. But in this case, your property is paying you $350 a month or $4,000 a year. And let's not forget that in this case, you're only investing $30,000. You still have an extra $20,000 that you can use now to go invest somewhere else. Maybe you put this money into the stock market, or maybe use this money to help fund another real estate deal, which is going to put even more money into your pocket each and every month. Now, before I get into option 2, if you are interested in learning more about money management and financial education, that way you can use your money the right way to build your wealth and invest your money to make you money instead of making everybody else around you rich, we have a free guide on money management and investing that you can read for free when you sign up for our daily newsletter. This guide will walk you through different strategies and things that you should be doing with your money if you want to become wealthy. So if you want to read this free guide, I'll put the link to how you can download this guide for free in the description below. The next option that you can do is pretty simple, and I don't actually have to erase anything on the board because I can just work off of these examples. Because now what you're going to do is you're going to buy a home, whether you buy this home or you buy this home, but you're not going to buy this home with the intention of living there for the long term. Instead, you're going to buy the home with the intention of just living there for 1 year. As an attorney who is not your attorney, I can tell you that most mortgages have a little loophole which say that you can buy this home to live in yourself. And when you buy a home to live in yourself, banks will give you a lower mortgage interest rate than you would get if you went out to buy the home as an investment property. But they have this little provision in most loans that say that you have to live in this property with the intention of living there for at least 1 year. But after that 1 year, you have the ability to move out of this home, and then you can move somebody else in, and then this person can pay you rent. So what this allows you to do is you can go into this property or this property, and you can buy a home with a much lower down payment, maybe even as low as 3.5% or 5%, depending on what kind of mortgage you get. And now you have a very low down payment on this property, and you're gonna have a very low mortgage rate because you're buying the home with a lower mortgage rate because you're getting the home as a primary residence. And then as soon as that 1 year mark hits, you pack your bags, you move out, and now you move into another home. Maybe you buy this home or you rent this home, but you move into a new home, and now you move in a new tenant who's going to be paying you rent every single month. So in both of these situations, this would allow you to buy your home with very little cash out of your pocket, because now you don't have to put down the full 20% if you're buying the home to live in yourself, but you're buying it with the intention to move out after 1 year, and then you're going to rent it out. So now you have a new tenant that moves in, they're going to pay for your mortgage, and then they're going to pay you a little bit of money each and every month. You might not make as much money as you're doing here because now you're going to have to pay more money to the bank here, but the whole idea is now you are able to start off as a landlord with much less cash invested, and you get to live in this property for the first year, and then every single year you just keep doing it again and again and again until your bank tells you that you can't keep doing this anymore. And then the final option that we're going to discuss today is a little bit of a hybrid. Now you're going to buy a property, but it's not just going to be a normal single family home. You're going to buy a property that looks like this. No, it's not going to be a comb. It's going to be a triplex. It could be a duplex, a triplex, a quadplex. Either one of these work for this situation. And now what's going to happen is you're not just going to buy this as a rental property to rent out to 3 different people. You're going to rent it out to person 1 here, and you're going to rent it out to person 2 here. And over here, this is going to be you. You're going to live in this property right here, and you're going to rent out these 2 units. So now you take your $50,000 down payment, and you're going to buy this $250,000 triplex. And this is $50,000. And again, if you're saying, what, I can't find a $250,000 triplex in my area, then you might need to look into a different area for this to work. So now you buy this $250,000 triplex, and you're going to have similar costs to what we talked about before. Here it might be a little bit more, but let's just say that it's going to cost you around $1,700 a month to maintain and manage and pay for this triplex. And now what you're going to be able to do is you're going to be able to rent out each of these units. So depending on how nice these units are, you might be able to rent out these units for $900 a month each, which means you will be able to bring in right around $1,800 of rental income. And now this money is the money that you get to put in your pocket. Remember, your expenses are $1,700 a month. This covers property taxes for the entire property. This includes maintenance and insurance for the entire property. This includes your property management fees. So now you're making $1,800 a month that your neighbors are going to be paying you, and this means now you will have a net of $100 coming into your pocket each and every month, and you have your neighbors paying for your mortgage. You have your neighbors building equity in your property, and you have your neighbors paying you an extra $100 every single month. So not only do you get to live in this property mortgage free, but you're getting paid $100 every single month just to live in your new home. The advantage with this is there's another loophole that says that you can go out and buy a primary residence with a mortgage and you can get this lower interest rate. But the real thing you have to understand is what is a primary residence? Because in the legal definition, a primary residence can be a single family home, it can be a duplex, it can be a threeplex, or it can be a quadplex, which means you can go out and you can get a primary residence mortgage from the bank to buy a single family home, a duplex, a triplex, or a quadplex, and then you can live in one of these units and rent out the rest, which means now you're living in one of the units and your neighbors are going to be paying you to live next to you. Again, there's nothing wrong with owning a home, but you got to answer this question for yourself. What do you want right now? Do you want to be in the business of generating that passive income, that cash flow right now to build your wealth? Or do you want to own that home right now? You have a lot of different options on ways that you can grow your money. We went over 3 options today, and this is all just within real estate. You can also invest your money in stocks and other places, but what you have to understand is when you have this extra cash, you can put this cash to work to help you make more money. So you got to figure out what's more important to you right now. Most people's biggest expense is their house because every month you got to pay this rent check or this mortgage check. But what if there was a way for you to live without a housing payment and without having to wait 30 years to pay off your mortgage? To do this kind of house hacking, you have to find a loophole in the system. What's considered a home? Before you give me a sentimental answer like home is where the heart is, we're talking strictly financial right now, okay? When most people think of a home, here's what they're thinking. They're thinking of this building with a roof on it, with a door, with a couple windows, actually maybe more windows, and then a driveway. This is what most people think of when they think of a home. But technically speaking, that's not the only definition of a home. I mean, you can own a condo, which is one unit, which is attached to a lot of different units. Your home can be an apartment where now you're renting this one unit inside of a building with a bunch of different units. Your home can also be a mobile home. So there's a lot of different types of homes out there. And if you wanted to buy a home, this takes a lot of cash. And most people don't just have a ton of cash sitting in the bank account where they can just go and buy their own home completely with cash. So what do? You go over to the bank, and then the bank is going to loan you some money. That way you have the cash to buy a home. So now the bank gives you this mortgage. That way you have the cash to buy this home. And then every month for the next 30 years after that, you're going to be paying your bank back this mortgage plus a little bit of interest. So this is what people want to avoid. They don't want to have this big monthly payment because it is expensive. And for the majority of people, when they think of being this housing payment free, they have to wait 30 years until they can pay off their mortgage. But there's a little loophole that you can use which will allow you to no longer have this money come out of your personal bank account. You could have someone else pay this loan. Let me show you what I mean. So you have this really nice 4-unit multifamily building on sale for $1 million, and each one of these units rent for $2,000 a piece. They're pretty nice units, they're spacious, they're nice. When most people think of buying this 4-unit multifamily building, here's what they think. I'm gonna buy this multifamily building for $1 million, but I don't have $1 million in the bank, so now I gotta go to the bank and get this commercial real estate loan. That way I have the cash to buy this investment property. So you go to the bank's gonna say, hey, you wanna buy this property? Great. Put down $200,000, and then we, the bank, are gonna loan you $800,000, and because this is a commercial real estate loan, we're gonna charge you something around 6% a year in interest. If you're getting a commercial real estate loan, a business loan, it's going to cost you a whole lot more than a regular mortgage, which is why at this time it might be something around 6% interest, which means this $800,000 that you're borrowing is going to cost you as the investor $4,800 a month. This is how much money you're going to be paying the bank every single month to own this 4-unit building that you're renting out. At first glance, you might think, wow, that's a great deal. You're making $2,000, $2,000, $2,000, $2,000. That's $8,000 a month in rent, and you're only paying $4,800 to your bank. That's thousands of dollars of margin. Except you forgot property taxes and property insurance and maintenance fees and management fees and property vacancies. Those 5 fees that I just mentioned are probably going to cost you something around $2,500 a month. This is in addition to your mortgage payment that you have to make every single month, your loan payment. So when your property is full, you'll be making $8,000 a month in revenue, and then you have to subtract your costs, which $4,800 plus $2,500, something around $7,300 a month, which leaves you with a few $100s of margin every single month to put in your pocket, and this can cover your vacancies that might come up and put some money in your pocket. But in this particular situation, you don't have a place to live. So now you're gonna have to go out and find another home to live in yourself, and you're gonna have to make a rent payment or a mortgage payment, and chances are this money that's left over after paying off whatever vacancies come up is not gonna be enough to cover your entire mortgage payment and your entire rent payment. So now let's reanalyze this deal, but this time you're gonna do something different. This time, instead of renting this property out to 4 different families, you're gonna rent it out to 3 different families, and you are gonna live in this unit right here for yourself. Remember when I asked you in the beginning of this video, what is a home? Well, from a legal perspective, as an attorney who is not your attorney, I can tell you that your home, which is called your primary residence, it can be a 1-unit, a 2-unit, a 3-unit, or a 4-unit property. So now if you go out and you buy this 4-unit multifamily building and you don't rent out all 4 units, you live in one of the units and you rent out the other 3, now this is a 4-unit building that you are using as your primary residence, your home. When you use this house hacking loophole, there are 4 things that happen for you. First, you get a much cheaper loan because now you're buying a home and you can get a primary home mortgage instead of going out and getting a commercial business loan. At the time of me recording this video, this might only cost you 3% a year in interest. Compare that to what you would have to pay if you got the commercial loan like I talked about earlier. So now if you wanted to buy the same $1 million property and you put down $200,000, now your monthly mortgage payments are going to drop from $4,800 a month to $3,373 a month. That's quite a big drop. $3,400 a month might sound steep depending on your income, but you have to remember one more thing. Your neighbors, your people attached to your building, are all going to be paying you $2,000 a month to live in your building each. All right, now check this out. So $2,000, $2,000, $2,000. Every single month, your neighbors are going to be sending you $6,000 a month when your property's full. But you got some costs you have to pay, right? First thing you're going to do is you have to pay your bank. You're paying your bank $33.73 a month. And then you also have your regular building expenses, right? Your property taxes, your maintenance, your management fees, your vacancy costs, whatever this is, right? You have your regular cost to have a building, have a home. And this is going to cost you, from the previous example, $2,500 a month. This leaves you with $127 every single month that you have all your tenants in there, after paying your mortgage, after paying all of your housing payments, your taxes, your maintenance, everything for your home. You still have another $127 in your month because your neighbors are so generous that they decided to pay your mortgage for you. You get to live mortgage free because you don't have a housing payment anymore. Your neighbors are paying it for you. You're putting an extra $125 in your pocket every single month, and your neighbors are helping you build equity in this $1 million property every single month, and none of this equity is being built by you. It's being paid for by your neighbors. But now what if you don't want to pay that $200,000 down payment, or what if you don't have that $200,000 down payment? Well, that brings me to the second advantage of this loophole. This is where alternative types of financing come into play, like FHA loans. If you go the FHA loan route, now you might only have to put down 3.5% on your loan, but the issue with FHA loans is there's a limit to how big of a home that you can buy. But the interesting thing here is if you buy a multi-unit property, like a 4-unit home like I talked about, because 4 units count as a home, then the FHA limit increases. But before I get into that, let me also remind you that more debt comes with more risk. If you're only putting 3.5% down, you don't have as much skin in the deal, and you have bigger multi-mortgage payments. And so just understand that more debt comes with more risk, and if you don't have a big enough equity in your property, then you're also going to have to pay PMI. But it is an option for some people who want to get into this house hacking game. In certain areas, you would be allowed to buy this 4-unit property with just 3.5% down with an FHA loan, which means you only have to put down $35,000, and now you have this 4-unit property that you're renting out to 3 other people. Now in this situation, your mortgage payments are going to jump to $4,000 a month. Okay, let's do the math. $2,000, $2,000, $2,000. You have $6,000 coming into your pocket every month from your tenants, and then the first thing you got to do is you got to pay the bank $4,000. So you pay the bank $4,000, and then you have to pay the additional $2,500 a month to manage the property, property taxes and everything else. That means every single month out of your pocket, you're gonna have to pay $500 to live here, but you also have a $1 million property that you're building equity in each and every month, and most of that is being paid by your tenant. And in this situation, you only had to pay $35,000 down to buy this $1 million property. The third benefit, remember I said there's 4, the third benefit is that now you can sell this property for a profit and not pay any taxes. If I, Jaspreet Singh, the real estate investor, come in and I buy this property to rent out, so now I'm not living here, I'm renting out all 4 units, and I rent it out for a year, and a year goes by and I realize, ooh, I can sell this property for $1.2 million, and now I sell this property for $1.2 million. Hey, I made $200,000 in a year, which is great, but I got to pay taxes on that $200,000 of profits. These $200,000 of profits of selling this investment property are called long-term capital gains, and so I'm going to have to pay taxes on the $200,000, and so I'm only going to keep a fraction of that. But when this is your home, remember, this is your personal residence, which means this is your home. You can do that if you have 4 units. So if this is your home, you have a special tax exemption which says you can sell your home for up to $250,000 profit and you don't have to pay any taxes. And if you own the home as a married couple, then you can sell your home for up to a $500,000 profit, which means you could sell this home for $1.5 million and then you wouldn't have to pay a penny in profit. But sticking with the example, if you buy this home and you live here, and then you can have your tenants, your neighbors, pay you rent every single month, and now your neighbors are paying for your mortgage. They're building you equity in your home, and now if you sell this property, your home, for $1.2 million, you lived in this home free, you built equity free thanks to your neighbors, and now you can sell this property and walk away with a couple $100,000 cash in your pocket. And yes, that's tax-free. And then the fourth benefit is you can do something that I like to call multi-level house hacking. At the time of me recording this video, most lenders have a rule that you are not allowed to rent out your primary residence unit. So if you buy this property, you can buy it as a home, your own personal residence, but you're not allowed to rent out your unit for at least 12 months. But after 12 months, you typically have the right to turn this unit into a rental unit as well. So now you move out and now you just got this new rental unit. Remember, if I bought this property initially as an investment property, I'd be paying 6% interest. I'd have to put $200,000 down and my monthly payments would be $4,800 a month. But if I buy this property as my own home and I live here for a year, remember, I can get this at a 3% mortgage. I can still put down $200,000, but now my monthly payments are gonna be something like, what was it, $3,400, something like that a month. And now I can live here for a year, not have to pay any housing payments because my neighbors are paying for everything, put $100 into my pocket every month, and then a year later, I can move out and then put an additional $2,000 into my pocket every month because these 3 tenants are paying the mortgage, they're paying all the housing bills, they're paying for everything else. This tenant is just profit after I move out. So now this new property where I just moved out of can keep paying me the $2,000 a month every single month because now your interest rate doesn't change. Your bank is gonna let you keep this 3% interest rate, which you're not allowed to get if you're buying it as an investment property. But here's the dilemma. If you move out of this property, you still need a place to live, right? So you lived in this property for a year. You didn't have to make any housing payments because your neighbors paid it for you. You built equity in this property, and then a year and a day later, you move out, you bring in a new tenant, and so you're putting another couple $1,000s in your pocket, but you need a place to live. So here's what you can do. Now, you find another property like this, another 4-unit property, and guess what? You start this process all over again. All right, let me just finish drawing the windows. I drew the doorknob before the door. All right, now you have 4 new units, and now guess what? You move here, you rent out these 3 units to your neighbors. Each of these neighbors are paying you $2,000 a month, and you start this process again. There's no limit to how many times you do this. And every single year, you can buy a new property, you can let your neighbors pay your mortgage, and you can continue building equity in more and more investment properties. Do this system 5 times, and now you have 5 different investment properties with very low interest rate debt that are making you a profit every single month, that you're building equity on every single month, that your neighbors are paying for you to live there for every single month. Oh, and after 5 of them, you also have $10,000 coming into your pocket as profit every single month through passive income. I know it's a lot easier said than done, but this process is possible, and it's a very accessible way for you to go and get involved in real estate because now you are having your own property where you're living in, but you're also building these rental streams, and when you're ready, you can move out and do it again. Thank you for watching. If you enjoyed this video, here's a video on things you need to be aware of before you go out and buy a home, and while you're at it, download our free guide on money management and investing, and as always, keep hustling. They want you to buy the best home possible, which many times means the most expensive home possible, which also coincidentally means the biggest commission check possible